obviously not an expert or anything. I'm just an average person. But I think I have some things to share, and you would all appreciate it. Some things to kind of get out of the way, though. Again, I'm not like super wealthy at all. I mean, obviously, it's about perspective or in relation to other things. I'm not like a millionaire, but I think I have some comfortable money and a job and everything. So, in that sense, I feel wealthy, but just kind of got a baseline things. I'm just a normal person. I don't own any $1,000,000 businesses or anything. So none of this is financial advice or anything. I just watch the same videos other people do on YouTube and read the same books and then put it into practice, and then now I'm kind of sharing my thoughts as to what I've been doing and done and the results of that. So take that into perspective. I'm not going to say anything in this video that's going to probably like change your life. Most people who watch normal videos on YouTube, like financial stuff, this is like kind of the same information. However, again, it's about the putting it into practice and seeing the actual results. So that is what I want to discuss and kind of hone in on. I think we'll get to this in a minute. But let's start a new page, and I want to help like illustrate some of my thoughts. I don't know where the best place would go in here, but let's do it like here. So, a passive income portfolio. We can't say it's just specifically stocks or ETFs. I mean, you can, but there's always going to be multiple vehicles. Let's start this off. I want a red pen for this one. Let's start over here. Passive income portfolio. I'm trying to get better at my handwriting too, but it doesn't always work out. So, passive income portfolio. I think we need to start, so I think I want to start like in the middle. We're going to branch out to, actually maybe not. Well, no matter who you are in the world, and I guess more, I'm going to specifically talk about my case, but you need some way of generating money. So, if you want a passive income portfolio, you first obviously need money. Like, it's pretty obvious. That money can be from a job or a business. Typically, I think those are the other, I mean, you can inherit money as well, but I think we're going to stick to more normal things. I don't think most people are getting inherited like a lot of money. So this is your input. Is your job and business. Input. You might, here's the thing, you might be saying, oh, that's obvious, like, you obviously need to have a job or money, whatever, but I think some people forget that. And, like, most normal people don't make, like, $10,000 a month. So you need to have realistic expectations as to how much money you're going to be actually putting in here. So from this job, you're obviously, you got bills, you got like other like essential expenses. Essential expenses. So really I think most people, only a small percentage of your monthly income is actually going to go to this, the passive income portfolio, because it's just how it is. And I think a lot of people, I mean, I'm not going to say I'm the only person to say this on YouTube, but a lot of people on YouTube, like when they make their videos, it just feels like they assume everybody makes a lot of money and they can throw into like the stock market and stuff. It kind of makes you seem like the person watching, at least me, when I watch those videos, like an outlier. I'm like, what am I doing wrong? But realistically, only a small percentage, so I don't want to get too much on a side tangent, but a small percentage gets invested, I guess we'll call it that, it gets invested into the passive income portfolio. So it doesn't matter, right now it doesn't matter even what, we're not even going to define this or get into this, it's just, we're trying to figure out how to get money into here, you obviously, you gotta safety funds. You have other, yeah. Sorry, we got a lot to talk about. A lot of stuff I want to kind of get into, so I don't want to get ahead of myself. What does that mean? Invested. Whatever you guys got. I don't know what I wrote there. But yeah, only a small percentage. I'll underline that. Small percentage is gonna get into there. So, I think this. Hold on a second. So, kind of getting to here. Expectations need to be realistic here. And some people, you might not get 10% of your portfolio or your monthly income into something like this. So I think it's good to have a goal, 10% maybe is a goal of your monthly income. So you need a goal. 10%, maybe 5%. And to be clear, this is only for the portfolio, or the portfolio. You're still gonna need to put away money for like a security fund just in case things, bad things happen. You're still gonna need to set aside some money for like a house or something. There's just other expenses and like places to put money. Because in my head, money that I put in here, a majority of it I never want to take out. Because the intent is to build something. But there's obviously going to be some overlap. Like, just an example, like, obviously I want a house. But I know I want an investing portfolio. At some point in my life, a portion of that portfolio is going to have to go into probably the house. It's just how it kind of is. And I think people, at least from my understanding of people on YouTube and such, it's like, no, you never take the money out of the portfolio. But it's like, I live in the real world where if I have money lying around that I can put into something like a physical asset that I need for my life, like, I'm gonna make that decision. And I think, to me, that makes sense. Because we all don't make infinite, or not even infinite, just a large sum of money where I can have this like $200,000 investing portfolio and then just have like another like couple $100,000 lying around for like a house. Like, that doesn't work, I think, for normal people, because we don't have that access to capital and that cash flow every single like month that we can then put away to build up different portfolios. So it just makes sense to me that I know in some point in my life a very large portion of this portfolio will then become like a house. There's obviously a whole bunch of other conversations that have to go into that, such as like the safety of the assets you're buying and how much you can rely on, and let's say in like 5 years, that asset or that thing that you're buying will retain the value. That's why I like bonds. Great idea. If let's say, I don't know, we're going down a little rabbit hole, but I think it's important. If I want a house in like 5 years, if I buy like, let's say 4-year, 5-year bonds, I know for quite certain that I'm going to have that money in the near future with some appreciation. If I do stocks, there's a possibility it's higher, but it's not certain at all. It could be a lot lower, it could be half, I don't know. But if I need that money in 5 years, I'm going to want a majority of that to be, I can be certain that I will have it. So, stocks probably out, but bonds and cash, maybe possibility. And the reason why you don't want all cash, though, is because you don't have control over the rates. So tomorrow we could wake up and the high yield savings account that's yielding 4% right now is at 1%. And I'm gonna wish that I had a portion of that in a bond or something where it's at least mature, or it's gaining more interest than just a savings account. Anyway, tangent. We'll probably go on more tangents, but it's all important. So gotta set realistic goals, and I think 5 to 10% is realistic. So right now, let me just pull my out of my net. So my net income. So my goal. Let's see. My goal, or I guess what I've been doing. Maybe you guys can't see this. I'm sorry. My goal is I think it's like 25% of my net monthly. Yeah, this is how do I want to put this? Stocks slash savings. And I've been doing like kind of 50-50 here and there. 50%. But I've actually been doing pretty good. It's been about 25%, yeah, so this is accurate. But not everybody can do that. Like, I don't have loans. I don't have a car payment. So I have a very high monthly rent. But I don't have a lot of other expenses that other people might not have. So obviously you want this number to be as high as possible, but this is kind of what it's at. And you obviously, yeah, so savings could be like partially security fund, but also just having access to capital. So I'm trying to put away much. It's probably more like 75-25. So 25% of 25% was it 1/8 or something? Why am I being dumb? 1/4? No, is it 1/16? I think 1/16. Anyway, I can't do math right now. But this is probably less than, like, it's definitely less than 10%. It might only be like 5%. And that's fine because we're normal, not normal. I'm not gonna say it's fine. You obviously you want as much as possible, but this is a realistic situation. So maybe only like 5% actually goes to stocks for me. Like per month, which isn't like that much when you really break it down. Because you can't put that much in because it's just too risky. So now that we've found, let's see, how do we want to do this? Boom. Oops, what am I doing? Monthly input. We have a number in which we will use each month to grow the portfolio. Now this, okay, this is important. To me it is. If this number is low, right, maybe it's, I don't know, $100 a month. So let's example. Let's say we get like $100 a month into the account. Well, let's say you get like 3% per year on that money in a stock. Or it doesn't even matter. It literally does not matter. So at the end of the year, you're gonna have $1,200 in the account, yielding 3%. Let's just say. It's obviously important to have something like this. Don't get me wrong. But let's say at the end of the month, end of the year, you have the choice: $1,200 in this account, yielding you 3%, which is what, $40? Is that right? 40. I want to verify. I think it's $40 a year. So you just increased your passive income by $40 a year, which again is 36. Am I doing that right? Yeah, I guess 36 makes sense. I think was it $40? Anyway, it's about $40, which again is it's a start. You have to build it, but it's somewhat insignificant in terms of other things. So what I mean by that is, you can have this, right? Or, and we're getting to this. I don't want people to think I'm not getting to how do you build a passive income portfolio. I'm just realistically breaking this down for the average person, because if you had $1,000 right now and you put it into a stock yielding 3%, yeah, your worth went up, and you have to start somewhere. But I think there are alternatives that you should probably do first. So what I mean by that is, yeah, okay, you have this money, it's in this, you get that a percentage per year, so it's about $36 a year. Do you think it's wise to take that money maybe and try and increase this first? Try and make money per month that you can then put to here. So maybe you get a lot more money. And I guess the big thing here is, so how do you increase this? Okay, education, business, like a raise, just stuff like that. Just, I think if you can only put away, let's say $100 a month. Again, I'm not a financial advisor or anything. I'm just saying for me personally, if I was only to put in $100 a month into an account, I'm gonna use that $100 a month and try and increase the amount of cash flow I can make. So I'm gonna invest in some business, like start my own company, enhance my skills somehow, and put that out there into the world, and try and earn some more money that way, and try and increase the life of somebody else's existence, and in return I get money. That's what I would do. And again, it could be business, education, a raise, a job, something else. So maybe now you make, let's say you could put $500 a month in, because you're spending your like a weekend. Again, you gotta live your life too. Like it goes by quick. You don't want to spend all your time working and hustling and grinding just to have some figures that generate you some money. And obviously it does matter, because it's like a way of life. Like you need the money to survive, to be happy. But there's a balance, and you gotta find that. But if you make 5% now, or sorry, 5%, if you make like $500 a month, now at the end of the year, okay, hold on. Let's say you do that, and now you make $500 a month, and you get at 3%. Well, 5 times 12 is 6,000. 6,000 per year. Let's see, you get 3% again. I'm just gonna double check. I understand. I can do math, but you never know. $180 a year. So you increased your yearly income by $180. But this is on top of you earning more money based on the skills that you have. So let's get this down. Boom, boom, boom. So the input is important, because if the input is small, too small, it's almost insignificant and not worth, I mean, I'm not gonna say the time, it's not worth the investment almost, because there are just better opportunities. So I want to try that point home. Now we got very far on the input, because it's important. Now let's say you start making money. This is probably where hopefully I didn't lose like every single person, because I think this point gets overlooked or underlooked maybe. So kind of recapping this, then we'll get into how I've been structuring my portfolio now that I have been able to get, let's say, 25% of my net income, the monthly net income. If your input is important, it's gonna mostly come from your job probably, or your business or smaller business. If the income you can only put away per month is too small or insignificant, and I say like $100, that's pretty small. I don't want to deter people from investing or saving. You obviously have to save, this is no doubt, but this is more like stocks. You obviously have to save, absolutely. But for the idea of putting money into a passive investing portfolio where you're essentially not touching that so it can generate you some cash flow, the intent of putting money into something like that and the reason for buying assets like that is different. If the money input is too insignificant, do something, provide more worth to the world through learning some new skills, by starting some business that you can do, or or some sort of like education where a job or some other employer will pay you somewhat more money. I'm not trying to be some life coach or anything, or overhype things, but you have to probably do something else to increase this if this is your goal. Get the number higher, monthly input's bigger, it's more significant and worth the actual investment per month as opposed to buying or doing something else. Now that we got that out of the way, okay, we're done. So input, oh, I messed that up. Okay. to buy. Let's do this. What to buy? Vehicles, maybe. I always forget to spell vehicles. What to buy? Now I have. So we got like stocks, ETFs, we got bonds, we have high yield savings. I didn't really want to make that too big, but high yield savings. There are probably some other things. I'm gonna go back to the beginning. I think I already wrote this all down. Oh, I did, but not really. So, okay, I got good questions here. We got dividend stocks, bonds, high yield savings, ETFs. So these are always the questions that I'm asking when I'm buying stuff. So okay, just where do I want to go with this? Hold on a second. Okay, so I'm always asking myself this each month. What is the market offering? I'm considering all three of these at all times. I don't really believe that like the people on YouTube and the people that say only dividend stocks, or only bonds. I mean, I can see situations where both. I can see situations actually where only bonds is good, but for most people it's probably not worth it. Dividend stocks is not always a buy. I think it depends on the economy. So, again, I'm always asking myself, what is the market offering? What's the macro environment? And I don't do research all day, every day. I'm just looking around the world like, hey, what's going on? Like right now, there's an election coming up. So, am I expecting the stock market to be a little more volatile? Probably. I'm just using some, again, more macro stuff. Like, is there a war going on? That's another thing. Anyway, what are the risk rewards? So, is there some options in stocks or ETFs where it's possible that there's higher risk, but there's higher return, and I'm feeling a little bit more like there's more return? I might go buy some more stocks as opposed to bonds or keeping cash. What are big life purchases that are coming, house or car or something? If I know something's coming in the future and I need access to the capital, I might be more deterred from buying dividend stocks or ETFs, and I might want to buy more bonds or just keep it in the cash, depending on how quickly things are coming or how quickly I need that money. And again, all of this is relevant because all of these can have the potential to generate passive income. It's not just stocks or just bonds. I like to think more holistically because having more options to buy, having more vehicles or instruments to buy, just kind of diversifies the risk a little bit, and it gives you just the ability to, what's the word I want to use? I kind of lost that train of thought, but the ability to have higher, different risk rewards and things like that. Anyway, I kind of lost my train of thought there. Is a shift in market coming? Is a shift in market sentiment coming? Kind of hard to predict, but like again, a big one right now is the election. That might really determine the fate for a lot of stocks the next couple months. So don't forget investing in one's own business, education. Yeah, you got to keep that in mind. And inflation affects all asset classes. I think some people say like, oh, cash, inflation's fixed that the most. In my opinion and experience from just being active in the market, no matter how you look at it, inflation affects everything. Actually, let's go back to here. So I'll consider all these things in mind when we have the next part of this conversation. So specifically for dividend stocks, I don't want to go too into detail on this because it kind of gets in the nitty gritty, but I look for these major metrics. The company's got to have free cash flow growth. The free cash flow per share is a really good metric in determining almost the value of it. Like if a company has very high free cash flow per share compared to another one, that company itself is just a better value in a sense. I mean, yeah. The amount of money they're making for every share that you're going to own is just a lot higher. So higher number, better. I think that's a really good metric. Another one is the market cap to free cash flow. The lower this number, the cheaper it is. And yeah, it's kind of like, this is like PE, but I just like using the free cash flow more because it's actually money that shareholders get in a sense. And that does affect dividends, and that's obviously why I want to be mostly aware of that number relative to other things like the market cap or how many shares are out there. I check I make sure the company's not too into debt. I've been guilty of buying companies that have a lot of debt, and some have burned a hole in my wallet, but I've been really trying to make sure that companies that aren't in debt, I'm paying a higher premium, or I accept that they might be more money because the risk is a lot lower that they're gonna. And I guess another thing too, if a company has a lot of debt, that means that they have to pay off a lot of free cash flow, or use a lot of the free cash flow to pay off that debt and the interest. So not all of that free cash flow, or not as much as that free cash flow can go into dividends. So lower debt, better. I gotta pay a dividend. I want the payout ratio to be kind of low too. And the company's future is a big one that I always look down. It's hard to predict that stuff, but they gotta be growing in a sense. That's why free cash flow per share is free cash flow growth is a good metric to at least look at to kind of get a gauge if they're growing. So at any given time, we have all these three things that we can, I guess, buy. High yield savings, you obviously don't buy, you just put it in your savings account, but this fluctuates. All these have their risks, they'll have their rewards, and they all should be considered. So, let's go to here. How do you want to do this? Every month, I have XXX money to buy something. I obviously have a job. I have some, I guess it's not really like a business, but I have things I do to make myself other money. So that all feeds into here. And then money to buy things. I wanted to mention one more thing. It's been, so every month I have XX money, whatever. It's been like 3 or 4 years of me consistently putting in money into an account. And sorry, I'm all over the place. Yeah, it's a slow process. Anyway, let me backtrack. Money to buy every month. I get money to buy, and I debate. Okay, do I want to buy some bonds this month? Do I want to buy some ETFs? What's the market offering me? Typically, I do a ratio, obviously, but I don't like number crunch. I don't see any point in number crunching. I just have money, and I want to buy some stuff, and I try to keep it overall. I'm not gonna say consistent because it just depends on what I want that month. But I have money that I put in the stock account. I have money that I put in bonds, and I try to cycle them. But you need to consider bonds. They'll expire after a few months or a few years, depending on what you do. ETF stocks, they won't expire, but ETFs, they have a little bit of expense ratio, and they have the potential to go down in price. Same thing with stocks. They don't have an expense ratio, but your individual stock you have, it might go down. You don't know. So the appreciation and depreciation might fluctuate. Bonds don't have that. At the cost of bonds, you have no ability to, like I said, control, but they won't appreciate. You'll get your interest, but you won't get any like appreciation like a stock or ETF does. But you're not going to get that depreciation in a sense of, like, you will never lose money if we disregard inflation in a bond. So, but you're not going to get, you're not going to grow 20-30% in a bond. And in the high yield savings, you technically don't have like any risk. It's just in the account. And right now they're yielding pretty high, like 4 or 5%. Sorry, I think it's like 4%. And that's only because the bonds are high too. So I mean, all the bank's doing is taking your money and buying shorter term bonds. So yeah, the reason why you would do this though is just getting you the access to the capital. So every month say this though, needs stocks slash ETFs. I don't want to say for wealth. What do I want to say here? Like, again, bond is debt. But a stock is an asset, I guess you want to say. So, I'm not sure what the wording I want to use here. You never want to be all, not that you never, but I never want to be all in stocks. I never want to be all in bonds. It's just going to be dependent on the risk level that I'm willing to do at that specific time. But you kind of need both. And like the stocks, kind of we mentioned before, I'm looking for companies, high free cash flow, at a, not discount, but at like some decent multiple, and I judge that quickly. Obviously, you gotta go into more detail, but free cash flow per share and more captive free cash flow, kind of gauging the metric on the value of the stock. Make sure it's got a little debt. So I'm buying stocks, that's what I'm looking for, although I do break my rules sometimes. If I'm not seeing anything in the market that's appetizing, maybe I'll keep the high yield savings or buy some bonds. But, I mean, if you really want to break down how to build a passive income portfolio and how I did, it's just get your input somewhat high where you can put money into something else and taking into account that you need to save and there are other things to put away money for, and then determine these are the things that you can buy at any given time. What's the market giving me? Every month, the money that you have that's left over, you're just gonna tuck away. And this is truly money, though, that you can tuck away and I'm gonna say not care about ever, because you have to someone manage it too, obviously. But it's money that you can say that this little thing, this amount of money is going to grow in value, and I'm going to allow it to be like my little army. I think what is that one book, he called his money is like little green men or something like that, that they can truly go out there and start working money solely to be passive. Like, this is not active, or that active. Obviously, you gotta buy some stocks here and there, and you gotta buy bonds when they expire, but it's like truly passive. But yeah, it's kind of 3 steps, and then you just need that time. You need time. Do I have my... No, I don't have my... But you need to have the time. And again, I keep harping on this input, but if the number is significantly small, even if you have a lot of time, like, if this number is too big relative to like how much you need per month, or if there's something coming up, then you're gonna need to pull money from this account. Like I said in the beginning, I'm probably gonna pull money from this account or these accounts to buy like a house or something. But that's like understandable, and I'm pretty sure other people are gonna need to do it in the future too. But that is like a goal. It doesn't have to be your goal, but it's one of mine. In the time being for me, how can I maximize my like yearly yield or money earned by minimizing risk? And this is just kind of how I've been doing it. But yeah, the more I'm thinking about it, I hope this was kind of helpful, though. It's not your, I feel like, typical how to build a passive income portfolio video. Like, people are, when they see a video like that, they want to know, what to buy, what percentage of their income to put in, and then what stocks to buy and hold forever. But that's, at least from my understanding, not to say not reality, but this is, I think, a more practical way that I've been thinking about it. I think other people too. I mean, maybe other people are thinking about this too, obviously, but I don't know. I guess I'm rambling now, but yeah. If I want to recap the whole video in a few words, find your input, increase that as much as possible so the percentage of that input per month can go into truly something passive. Figure out what to buy. What is the market offering? What do you want? What's your risk tolerance? When does the money need to be available? And every month, rinse and repeat. And stick to your plan. Yeah. Stick to plan. You know, if you can, obviously, you gotta live life a little bit too, and sometimes you might need to pull money from here and there. You know, you wanna go on like a trip or something, or, you know. But, you gotta define some goals and stuff, and, like, yeah. It's a lot. It's a lot, but it sounds, it might be complicated, but it's not. But anyway, let me know down below what you thought of the video. I didn't really plan it. I had planned to discuss this idea of building a passive income portfolio. I thought in my head we were gonna talk more about, you know, like stocks and stuff, but that's not what it's about. You know? Because buying stuff is easy. Figuring out what to buy and then associating the risk to the time horizon in which you might need the money. That's a little bit harder. But anyway. Take care, everybody. Stay tuned for some more stock videos. I've been trying to do like the monthly updates. I slacked in October though. But yeah, I think that'd be a good just journaling every month or so on how the portfolio is doing. But take care.